right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we have, obviously well, let's talk about what we've got going on today. So today we have Canadian manufacturing sales, foreign securities purchases, and out of the U.S. we have Empire State manufacturing data that comes out in an hour from now. So what we have to do is we have to get ready for today's action, obviously. So I'm going to start off with the euro, and I've got to go grab the bias chart, and let's go there. Okay, so let's go over to the euro. So here's the euro dollar, and like I said, the euro, very limited reaction. If those attacks in Paris would have happened while the stock market was open, we would have seen a jolt lower in the euro, and then it probably would have got bought right back up. Unless you have an attack, right? Like for example, we had September 11th, okay, was an attack of the World Trade Center really close to Wall Street. That had obviously an enormous effect on the markets because it hit so close to where the markets were basically centralized, if you will. Whenever there's like in my experience, and I hate to look at it this way, but whenever there's a terrorist attack like that and you see the initial market reaction, the reaction after that is usually a good time to trade. And I know it sounds horrible as a capitalist, if you will, to say that, but it's true. Whenever you see a knee-jerk reaction because of a type of event, you usually want to be trading the reaction to that, like the, oh my God, that just happened and now we're getting a bounce back, type of thing, and you want to trade the bounce back. Unfortunately, we didn't get an opportunity to do that because everything happened when the market was closed. So that's why I tweeted that over the weekend or yesterday, like, don't get caught up trying to short the euro at the open. I think you'll have an opportunity to sell it higher. Now the euro gap down, move lower, and then bounce back. We haven't totally filled the gap yet. Actually, we have not. Do I think the euro could go higher? I think the euro has the potential to go higher. What I'd like to do, though, is I'd like to remove some of these drawings that we had from last week, and I think this is the range that we have to trade in right now, and obviously 106.70 is support, and you can see buyers even over the weekend, they emerged down there. I mean, the buyers came in at 106.86, so any move down to 106.75, you're probably going to find buyers down there. Hell, I might even be down there. But 1.0675 I think is major support, and really key resistance comes in at 108.30. All right. Now on the hourlies, you can probably do this. Now, and I'm going to be perfectly frank with you guys. I hope the euro squeezes. I'm long the euro pound, so I hope the euro squeezes a little bit. What happened over the weekend didn't change my thinking with the euro pound. And I still think the euro has the opportunity to squeeze higher. I don't know how far we're going to squeeze. I sure as hell am looking for a higher euro to short, personally. So I think a move, up towards 108.20 is possible, but really a move towards 108.50 to 109, I would be more than happy to short. I'm not shorting it here, though. Okay, I'm not trading the euro on the short side right now, and I would be willing to trade it short up here, not here. Okay, so 108.25, I think, or 108.30 is possible. Okay, and I think you've got to let this range just play. And you know, we may not make it up towards 109. This might be it. I mean, we might all we might be doing right now is bouncing around in this range before the next move lower. So, you know, a move up here, if you really want to short the euro, I think is a better short up here. You know, if you want to go long the euro, going long the euro down there makes more sense. Okay. Yes, the Kiwi is trying to break down below 64.80. I see it. It's trying. We'll see. And by the way, initiating trades into a trend at this time of the day is not the smartest decision. Okay, just so you all know, you don't want to at the changeover between the European and the North American session, when it's Europe's lunch like it is right now. You don't want to be initiating trades, not in the direction of what's been happening overnight, because typically you'll get some profit taking right around now. Right, so just be real careful. I don't think I'd be shorting the Kiwi just yet. But I'll tell you, the Kiwi is a weak sister. Okay. The bias for the euro is bearish, of course. Let's go over to the cable. Here's the pound. Now, the pound, oh, gosh, dang, I got a big announcement. Shoot. You guys might have missed this on Friday afternoon. Yeah, especially all you Europeans. Guess who's going to be a guest December 10th? Peter Schiff. You got it. Peter Schiff, December 10th. I will have Peter Schiff on the Morning Edge. Joking. I'm joking. I would never have that jack off on my show ever. Mark Chandler is going to be joining us. Mark Chandler, December 10th. I have to tweet it. I'm sorry. Join at Mark Making Sense on as a special 1 hour. I got to tweet this one. I told him I was tweeted today. We talked about. There's a reason why I'm going to tell you this too, because him and I had discussions about the euro pound. So just hold on. I'll join Mark Chandler as a special guest on the Morning Edge webinar on December 10th at 8 a.m. Eastern. There goes. He's coming on a week before the Fed meeting. I asked him to come on a week ahead of the Fed meeting, and he said, "Yeah, I didn't want to." Okay, there. I just tweeted it. Mark, pun intended. Calendars for Okay, Mark spent an hour with us. He spent a whole hour with us, which is really cool. Also, okay, and then also Chris Bayer is going to join us too. Okay, so the whole reason why, thanks for jogging my memory actually, because I chatted with Mark at the end of last week. We were talking about the euro pound, and we were talking about the potential of it bouncing. And this is actually before the attacks in Paris, so it was probably a couple hours before that happened. But I was telling him, I'm like, yeah, I'm actually bearish the euro pound, or I'm bullish the euro pound temporarily. I said it's because the pound dollar, the pound dollar will be is really rejecting this underside of this trend line. He goes, yeah, I've been bearish the euro pound for quite some time. He goes, but I do expect I think it's at a place where it can bounce. We were discussing the euro pound, and I was telling him why I'm bullish the euro pound right now is it's as a result of what's happening here. Okay, so anyway, it was really it was a good conversation, but he was very cordial, as he always is, extremely polite and very accommodative, and he's looking forward to hanging out with us December 10th. He's going to spend a whole hour with us again, and so we're going to be discussing Mark just retweeted it. Awesome. So anyway, going to be really cool stuff. Yeah, Mark is obviously looking right now at the tweet, so he just retweeted that tweet as well. So really cool. All right. Anyway, so the cable. Going back to the cable. So this is a big deal. Friday's highs, or this 50% retracement is major resistance. We don't even really need to pay attention to anything else. All I have to put right now is 152.65, right? Because that's the resistance from last week. That's major resistance. As I mentioned to you guys last week, as long as we stay below there, that's bearish. Period, end of story. Okay? As long as we stay below that high. We get above that high, it changes things, right? We stay bearish as long as it's below there. And I'm going to tell you right now, as long as we are below there, I will be long the euro pound. I think. I mean, I'm pretty confident of. Okay. All right. Let's see. Support. Let's figure out where support's at. Oh, that's really nice. GK said, and while I'm looking at this, I'm gonna read his comment. GK said, "Hey Blake, I just want to say hi. I really love your show, man. I've been listening on and off for years. It's pretty outstanding how consistent you have stayed for so long. Thanks. Kudos, bud." Oh, thank you, GK. That really nice comment. I don't know if I mean I've read your comments from time to time, and it's good to hear from you. So thank you very much. Okay, support 151.70. That's support from last week. That's really big support for today. If this breaks, if that breaks, that 51.70, you got to start looking at the cable as being a short against other things too. I don't know, what else you might consider. I might actually start looking to short the pound yen soon. I'm strongly considering it. I have not shorted it yet, but that's something that I really wouldn't mind shorting. So just some food for thought. All right, let's go over to the Swishy. Okay, so the Swissy did not come down today. It's actually break even. I think it is. Pretty damn close to break even. Yeah, it's up a pip. Um, Now the Swissy, nothing's changed here. I will reiterate how I really want to be long the Swissy. I'm trying to. I really, really want to be long the Swissy down here. The lines just didn't come over like I wanted them to. I really would love to be long the Swissy here. Okay, somewhere below parity. Because see, what I think is going to happen is we're going to come down, we're going to break below parity just enough to shake the trees of some longs, and then we'll be able to get long. So, but parity is the first obstacle. I mean, if we get down to parity, I mean, I might even start nibbling there, but I really want to be long down here. Okay, we are struggling at the 1.0090 resistance. So support is 1.0000 and resistance is 1.0090, and that's key resistance. Bullish. Okay, let's go over to the yen. Now the yen, Marco sent me a chart a little bit earlier. I actually tweeted it. He said, hey, you know, we're at a 618, and it was a great observation. We are. The problem that I see with the dollar yen is that we have see that flag that we had from last week. That's the only problem. Okay. Now we are at the 618, but remember, I personally I'd rather be short the dollar yen on a move up to 124. I'd love to see us breaking the new highs here, push the underside of this trend line, and then get short. Personally, okay. I I don't know. Okay. I don't know if we're going to make it all the way up there, but I will state that we're coming out of a flag, all right? And that flag, you can see even that bottom came into play last week, or overnight, excuse me, following, you know, the horrific events in Paris. We had a very shallow retracement, 38% retracement. I mean, that looks like a flag. I mean, I don't think we can, you know, deny the fact that that looks like a flag right now, right? So, you know, just be careful shorting it. I think that's the, I guess the number one uh, 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 thing to talk about here is just be careful shorting this thing. All right, all right. So we are up against some resistance right now, but I don't think that's I don't want to write that resistance because it's so damn close to where we're at. If we can get a move up to the 786, which you can see some horizontal resistance up here as well, that comes in at 123. 123.30 basically. Okay, 123.30. I mean, we're up against resistance, right? At the, here, let's go like this: 123.10 because that's resistance now. But we can also write 0.30. Okay, we are in a range. Support. Let's delete. Well, actually, I don't want to delete that. See this move down here? See that trend line? I really don't know where support's at, guys. I mean, you know, this is a parallel line to this pretty much. So, I mean, you got your channel, if you will, but I don't know where support's going to be. I guess right here, you know. Amanda says, "Isn't the flag too long for the pole?" It's pretty close. I don't. I would say it's close. I mean, we could probably argue that. You know, is that more than 50% the distance to the pole? I mean, we had the same argument. Remember this? We had the same argument right here, Amanda. Right? Same. You know, flag pole. This is 50% or close to. You know. I mean, there's no set rule. There's no like, oh, it exceeds 50% and that's it. It doesn't work. You know, it's thereabouts. I mean, that's everything about technical analysis. There's no like hard and fast rule like guaranteed it's not going to work if it exceeds 50. It's pretty damn close. You know what I mean? So you just got to be a little bit more skeptical of it. But I mean, right now it's trying to bust a move. I just, what I would be more concerned with right now is where support is. So support, you know, if you can, if you, you know, if it comes back down to this 122.70, it's probably going to find some minor support. Not great support, but minor support. Personally, I don't know what to do with the yen because I mean, you look at the equity markets. The equity markets are in rally mode, you know, and it's just it's not stopping. All right, let's go look at the Canadian really quick. Let's see if we can bust this one out. Now we do have a bunch of Canadian data coming out. Let's remove that resistance. So and let's remove this fib. Okay. So we hit the 786. We've been struggling at the 786. I guess what I would pay attention to here, well, definitely this upsloping trend line at 132 is still in play. So if we get down to 132, that's a big deal. That would be a big drop, wouldn't it be? It would be. I think we have to pay attention to this resistance right here because if we can finally break above 133.50, that might open up the upside. So I think we got to go 132. Dips to 132 will be supported. That's major support. 133.50 is resistance, and we're still in a range. Okay, when we come back, we're going to do the Kiwi. We'll do the Kiwi, we'll do the Aussie, and dollar index. We'll look at the peso and everything else too. So I'll be back in about 5 or 6 minutes. Don't go anywhere. Be right back. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Sorry about the wait. Okay, let's talk about the Kiwi and the Aussie. Let's get into those. So here's the Kiwi, and you can see we're just on major. I mean, this is just major support. There's no really other way for me to explain that we're just sitting at the major support. You know, if we break much more below than where we're at, I mean, it exposes another 80 pips below. So the lows here, you can see 70, I think 77, there's a 79, there's a 77 right there, wherever it was at, 77 right there. You know, so a lot of support down here, okay? And the overnight low is probably around 77, 74. I mean, we're just sitting on pretty key support. Any which way you slice it. Below that, let's double check something. Below that, it's going to be 64.50. We have 64.54, but we'll just say it's 64.50 as support. I think if we start testing those levels, though, if we're down, you know, we're down below 64.70, we're down towards 64.50. I mean, you just have to imagine the Kiwi is going to be under a lot of pressure after that. Okay. resistance for the Kiwi. I mean, the only way you're going to take the downside pressure off the Kiwi at this point is a rally back above here. Now, also keep in mind, guys, that this is following a strong retail sales number. Okay, it's following a strong retail sales number. So we have to get. I mean, you're going to have to scale this resistance here at 65.50. You have to scale above that resistance to take off the downside pressure. 65.50. I know we've been in a range environment, but we're really starting to turn bearish. Today's going to be make it or break it day for the Kiwi, because if we can't come out of this, and reverse the selling pressure right now, I think we're going to be bearish right back down to the trend lows. Okay, so let's go over to the Aussie. Yes, we do have dairy auction tomorrow. That is correct. Okay, here's the Aussie. Now, the interesting thing about the Aussie is we can't get its rally going either. Even with that strong employment report from over the weekend, or last week, excuse me, can't get moving. The risk is that we push down to the 70.70 level, resistance 71.50, which is this right here now. That trend line is now resistance. So I mean I can get rid of that, but 71.50, 70.70. We are in a range here. Okay, let's take the dollar index. I mean, look at the dollar index and how well it's holding up. This trend line support that we drew from last week, I mean, that's it. As long as we are above 98.85, you can't be bearish the dollar. Okay. Resistance 99.50. Bullish. Let's take a look at the peso really quick. See if there's anything happening here. I got asked a little earlier, I'm not too sure who asked me about the peso. Here, look, this is another elongated flag. Look at how long this flag is. Is it invalidated? Okay, so here's the peso, and it's really close to starting to break higher. I think 1680 is going to be resistance for today. Support is whatever this spike low is, 1666. $16.66, If we break that 1680, then it's probably going to rally. Now remember, a lot of that's going to have to. You're going to have to wait. Hold on. 1666. 1680. Remember that in order to get a rally here, I think you need equities showing some weakness, which they are not right now. Okay. US dollar, Norwegian krona. Look at how we're just hugging that support right here. If you guys want to be long the U.S. dollar and Norwegian krona, you just get long and put your stops below that spike low here. I mean, if you really want to. U.S. dollar, Swedish krona. I mean, there's resistance coming into play. So anyway, um, I don't know what to do with other than we're trying to break out of a bull flag pattern, but it's hard to get super bullish right now just because the euro. I think the euro has a chance of squeezing, so that's the reason why. Anyway, I'm going to keep them off for right now. I don't think there's a whole lot to do there. So there's your bias chart, and let me go ahead and take some questions. So